now only be for 5 years. That's really the fundamental change which the tax authorities have made. So as I was mentioning earlier, the earlier section 12A of the Act that pertained to anyone which was in existence as on 31st of March, and any process which is already undergoing approval before the IT Commissioner, that order, if not already passed, shall deem to be an application made under section 12A, which is the old provisions. For simplicity, without going into the technical details, this is a quick summary of how the existing provisions look, which is on the left-hand side, and the new provisions, which are the section 12AB. As I mentioned earlier, under the erstwhile provisions, it was a one-time registration, and it would hold good till it is either cancelled or the non-profit organization decides to shut down. While under the new provisions of section 12AB, the registration will only be valid for a period of up to 5 years if you have sought a permanent registration, or up to a period of 3 years in case a provisional registration has been sought for. And we'll go into the details of these slightly later. As regards the renewal, under the earlier provisions, obviously there was no request or a requirement to renew your registrations. Since it was valid for perpetuity. However, under the new provisions of section 12AB, the renewal of registration becomes mandatory within a reasonable time before the 5 years ends. Again, to make this fairly self-explanatory, and we are using some examples in case and we're going under both scenarios where you've been registered under an existing law, or if you're going to be registering for the first time. Under existing laws, if an application for registration needs to be made, it would have to be done within 3 months from the commencement of the new provisions. The new provisions come into effect from the 1st of June, and therefore your application would have to be filed on or before 31st of August 2020. Let me once again remind you that this becomes obligatory on all organizations which have income tax clearance or exemption as on date. So this is not optional, this is not recommendatory, this is mandatorily, which means that you have to apply for renewal of your registration under the new provisions on or before 31st of August. Again, our professional advice is always that you should apply well in time and not wait for the last due date, simply because there are challenges with technology and with the COVID scenario that exists right now. No one knows how the computer systems or how things might be working at the end of August. It's advisable to do this well in advance. While if you were registering for the first time, then you need to apply at least a month prior to the commencement of the previous year in which you actually want to start the work. The officer in charge would obviously be the commissionerate under whose jurisdiction you would fall into. The income would be pertaining to the year from which your approval has been granted to existing NGOs, while it would be for new NGOs from the year in which they start. By this, we mean that the income will be exempt if you continue to file your registration within the due dates, which means 31st of August, or within the 1 month period for the new organizations. As regards the time period, the orders need to be passed within 3 months from the end of the month in which the application has been filed, if you are an existing registered organization. And if you are a new entity seeking registration for the first time, you would typically get the orders within 1 month. However, the caveat is that, like the FCRA regulations, there is no clarity on if the government or if the tax authorities do not take a decision within the 3 months or the 1 month, whether it would Whether it would mean a deemed approval or you would still have to wait, that's not something we are clear as of right now based on the guidelines which have been released. As regards to the renewal process, to quickly walk you through the renewal, and again, this is something which is only going to be relevant about 3 years or 5 years henceforth. But just to give a basic idea, the application of renewal of registration typically needs to be made 6 months prior to the expiry. You would similarly have to file it in writing before the commissioner or the principal commissioner, wherever your jurisdiction falls. The year in which the renewal shall apply would be in as per the current scenario, 30th September 2023, if you were given provisional registration. And typically, the order would again be passed within 6 months of the due date. This is obviously a provision which is only in the nascent stage. We're all at least 3 years or 5 years away from these timelines, but this is something that you would need to be aware of just from a knowledge point of view. And as and when the provisions change or evolve in the next 3 years, you ought to be seeking relevant professional advice on the process when it does come to those deadlines. And again, to clarify, all of these processes for now are supposed to be completely online. At the moment, there does not appear to be any requirement to physically submit anything. More so in the COVID space, it's more likelier that these provisions will continue to be online with limited requests which might be taken offline in case required. In case there is a process of registration for those granted provisional registration, it would typically be fairly similar. The process, the timelines would be slightly different, but in concept, the process is going to be the same. And again, we would advise that you apply well in time so that you are not struggling to get last minute delays for these registrations. This is sort of a summary slide of all bits that we've just discussed right now, and we're using this as an example. Whenever you need to make an application for registration under the new code, that needs to be done by 31st of August. In case you need to register yourself, it would be applicable for a period of 5 years, which means we assume as of right now, you have filed it within the due dates, and therefore your registration would typically be allowed till 31st of May 2025. And accordingly, it would be advisable that you file these registrations and take up the registration within the timelines that are being proposed. And if you do, then typically the order should be received on or before 30th of November 2020. When you're going in for the process of renewal of registrations, we would advise that you would go ahead and apply on or before 30th of November 2024, and consequently the dates which have been mentioned in point number 2. The third point is also important, that in case you've undertaken any modifications of the objects or any changes which do not conform to the conditions of registration, and we're using 5th of July as an example, if you have undertaken that modification on 5th of July, you would have to file an application where such changes or modifications have to be intimated and permission sought for by the 4th of August 2020. Finally, moving to the consequences, as we suggested earlier, this is a completely new process. There are bound to be some challenges, while the government will make sure that they are doing their best to reduce the challenges, but it's important that you are seeking proper professional advice in case you do not have clarity, and any omission, incorrect submission or errors might potentially mean that your registrations will not be granted, and the whole scenario that a few of you might have faced in the FCRA process, the transition period becomes extremely difficult, and you might actually be in a position where your exemption has been withdrawn or cancelled, and effectively you come back into the tax fold as a taxable entity. Quickly also moving into a scenario where a new organization has been set up after 1st of April 2020, and we're using again in the serial number 1 an example that if you've been registered on 5th of June 2020, then you need to file your application by 28th February 2021. And if you do file it, you will get exemption for the entire financial year 2020-21. The orders typically should be passed within 1 month of the end of the month in which you filed, and therefore it would be typically passed on or before 31st of March 2021. If you sought provisional registration under Section 12A(b), again, the registration which might expire on 31st of March 23, you need to file it 6 months in advance, and therefore 30th September 2022 will become the relevant date for you. And again, the consequences are fairly similar, where in case you do not file these registrations, you will become a taxable entity. Talking about the modification in the object clauses, in the past, an object clause modification was not as strictly monitored, but this is something which the tax authorities now mandatorily need for you to file. And therefore, if you have adopted or undertaken any modification, a fresh application for registration needs to be filed. If such modifications do not conform to the original conditions of registrations, which means that if you were originally registered as an education promoting entity and now you want to change your purpose and change to something which is entirely different, you would have to file a fresh application, and therefore the application has to be filed within a period of 30 days with the relevant commissioner, and the registration shall be effective from the year in which such applications have been filed and the orders have been sought for. The other aspect which we need to be aware of, and we'll just take a quick pause here, is relation to the change of process of the donor and the donee relationship, which means approvals under Section 80G. The provisions of Section 80G have also undergone a fundamental change, where the earlier applications which were for perpetuity, also like the registration under Section 12, now become something which is a process which needs to be renewed of every 5 years or every 3 years, depending on a permanent or a provisional registration. The whole process would by and large be similar. And for the simplicity, we've not elucidated the whole process, but timelines of 6 months in advance and the consequences would be pretty same. And therefore, we strongly advise you to start collecting the necessary information, both for the approval under 80G as well as the registration, and be aware of the timelines of 31st of August. Another change which is absolutely new is that all receivers of any donations, which means the non-profit entities, have now mandatorily to prepare and file a statement of donations which have been received during the year. There would be a prescribed form and a prescribed format in which these need to be provided. You would obviously also need to continue to file and furnish a certificate to every donor. The certificate must mention the amount of donations. It should clearly mention the prescribed particulars and needs to be issued to the donor within the prescribed time from the receipt of donations. The above compliances, as I mentioned earlier, is a fundamental change from the erstwhile guidelines, where there was no requirement to file such a data with the tax authorities every donor-wise. The other simplification which the tax authorities have done is that based on the data which has been uploaded by the donor, by the donee, which means you guys, the tax return of the donor will be auto-populated. Another change, which is in terms of the penal consequences, there is a late filing fee of rupees 200 per day, which will be imposed on the organization in case there is a delay in filing of the donation statement or the certificate. There are also more stringent penalties in case you do not file the return of donations as referred to earlier. These amounts are not going to be less than 10,000 and may extend up to rupees 1 lakh. The whole purpose of these is to primarily bring about some level of transparency and some level of automation in the whole process. How this practically pans out is for something we all have to work through in the next few months. There is also a change in terms of the due date of filing of the income tax returns. What the government intends to do is that once the audit has been completed, they intend to simplify the process of filing of return, and therefore the process becomes, once the auditor has filed his return as the audit statement, the non-profit entity would get 30 days thereafter to file its return based on the data which would be auto-populated from the audit report filed by the auditor. In conclusion, the various changes that we just talked about will bring about the change in terms of the registration process. The timelines which have been made stringent are applicable to both sides, which means that the non-profit entities have to be more disciplined in terms of filing the applications for registrations or renewals. And similarly, the tax department will also be more prompt in deciding these cases, where from the earlier timeline of 6 months, they will now have to pass decisions within 3 months or 1 month, as the case may be. And right at the end, we've also simplified the audit and the tax deadlines. The annual audit still needs to be filed by the 30th of September. The form will potentially change. The ITR due date becomes 31st of October from the current year, and a new form will have to be filed. The registration process, whether under Section 12 or 80G approval, becomes now only for 5 years, as against a perpetual registrations in the past. These deadlines are obviously based on the law as it exists today. We are not sure in the post-COVID scenario whether these due dates will be extended or may not be extended, but we would strongly advise all of you to prepare for these well in advance, to collect the data, and to seek necessary professional advice for either the registration and also the audit aspect, so that at the last moment, you're not struggling to comply with the new guidelines as well as the new forms. Let me take a quick pause here while Vanita, you run the next bit of the poll to get some insights. Just giving it another 5 seconds to wrap up with the poll. Right. So I think our reason of doing this poll at the beginning was to understand the mix of the audience. And I think the CSR provisions, and again, these are proposed amendments to clarify. The most important bit is, some of you might be aware, is depending on the type of entity structure, whether you are eligible to receive a CSR grant or not, that process has fundamentally changed. And I could see that 80% of the audience is not a Section 8 company. In the interest of time, again, we're not going into the theoretical concepts of what CSR is as an objective. I think all of us are aware of what is the details of the CSR provisions. Just as a quick recap, the Companies Act 2013 requires any entity which satisfies any of these conditions to become eligible under the CSR provisions, and therefore an obligation on their part to go ahead and spend at least 2% of the net average profits on CSR activities. Until the last year, the CSR clause was primarily voluntary. By voluntary, we mean that there were no penalties which had been prescribed, and therefore the organizations, even though they were obliged to be spending 2%, this was something which was not being followed up or was not being monitored in the true spirit that the government had envisaged. And therefore, they've made fundamental changes in the whole process. The amended definition of CSR, I think one of the relaxations which have been kind of coming through is indirect coverage of benefits to employees. And actually, let me go step by step. The following activities have been excluded, which means any activity undertaken in pursuance of normal course of business that is no longer covered under CSR. They have specifically clarified that any activity undertaken by the company outside India will potentially be excluded from the CSR definition. Any contribution to a political party, whether directly or indirectly, will also not be covered under CSR. And then activities that significantly benefit the employees, that means greater than 25% of the beneficiaries need to be employees of the organization. These will not be covered as a CSR objective. To clarify, the amendments have been proposed by the General Circular of the Ministry of Corporate Affairs. They have clarified that the following activities will be covered. These are all scenarios from a post-COVID point of view. The following activities in terms of the scientific research or provision of quarantine facilities or even grants to the PM CARES Fund or the PM National Relief Fund will be determined as CSR activities. Also, there have been some proposed amendments. Again, just to repeat, these are proposed amendments and this is not the law. But the CSR amendments which have been introduced require companies to deposit the unspent CSR funds into a specified fund in case they are remaining unutilized at the end of the fiscal year. This amount must be utilized within 3 years from the date of transfer, failing which it might be deposited into one of the government specified funds. You may potentially also now get the opportunity to engage an international organization for designing, monitoring, and evaluation of CSR projects, and that we feel is a welcome step. Thirdly, any surplus arising from the CSR projects can be carried forward in a way, and also these surpluses arising will not form part of the business profit of the company and will be plowed back into the same project or transferred to the unspent CSR account. This is something which will allow for you to carry out long-term projects with organizations rather than focusing on short-term projects which have only the span of a year. Another welcome step that we feel is in terms of bringing about some transparency, and we'll discuss that slightly later. The most fundamental change under these CSR proposed guidelines is from a point of view of who can receive the CSR funds, or indirectly, who should be the spender of the CSR funds from the company's perspective. Under the proposed Rule 4, it states that the board shall ensure that CSR activities are undertaken by the company itself or through a company established under Section 8 of the Companies Act, or any entity established under an act of the Parliament or a state legislature. The caveat or the exception carve-out is that these provisions will not potentially apply to those projects that have been approved prior to the commencement of these proposed rules. The basic impact of these proposed changes is again extremely important to understand. This potential change would completely disrupt the whole NGO space. It means that large or small organizations which have been established as a non-Section 8 company will no longer be eligible to receive CSR funds, which means 80% of our audience, if these proposed changes go through as it is, will not be a CSR approved partner which can receive grants or donations. This will impact even large organizations, their charitable arms like the ICICI Foundation, the Reliance, and etc. The Section 8 companies which continue to be operating will be the only exempt entities, and therefore you would have to consider an important aspect of either shutting down your business, shutting down your operations as a trust or a society, and setting it up as a new Section 8 company, or going down the route, which is slightly more complicated, of converting yourself from a trust to a Section 8 company. So while the audience digests this information and some of the potential scenarios, I think, Vanita, it might be useful to just get an immediate reaction from the people on what their thoughts are on how they might react if these proposed changes go through as is. And therefore, if the audience could react to the poll. Great. I think we've got a fair idea, Anita, from the polls that we've run thus far. The 50%, which are obviously not sure, I guess that's the status across the country where most people do not have clarity. I'm slightly confused on the 28%, which said that we're not looking to change our legal registration. And my only presumption are those entities which are either already Section 8 companies or are from the for-profit space. Otherwise, you will potentially lose out on a huge chunk of inward grants and donations from the CSR point of view. So these are insights that will be useful for all of us to reflect on and monitor as these changes go through, and then appropriately decide whether you would like to continue proactively to explore alternative routes or go ahead and convert yourself into a Section 8 company. In the interest of time, some of the other changes that we like to spend a few minutes on the changes. And I feel these are some of the positive steps to bring about some transparency for all the members of the part of the audience today. You'd have some long-term view in terms of what is the action plan of the board in terms of their CSR policy, where they're obliged to display some of these details on their website. They are obliged to formulate and recommend long-term action plans, and therefore you would now have the ability to go ahead and have long-term partnerships with these corporates rather than doing a 1 year or a limited time period process. So these changes in Rule 5 and Rule 9 are, I feel personally, a positive step to give some long-term clarity to how your progress needs to be with these organizations. There are obviously some changes in terms of the penal provisions as well. These would be applicable on the companies, and therefore we're not going into too many details, but these are some of the changes, some of the administrative changes have also been brought about from a company's perspective, and some sunset clauses which are being introduced. Dhaval, if you'd like to take over the last bit and share your thoughts around the changes on this.
Yes. Can you just quickly share the controls with me? Yeah. So let us now move to the next much talked about topic, and there's a lot of confusion with respect to the contribution that needs to be made to the Charity Commissioners Administration Fund. And we have received a lot of requests from the many NGOs as well as Atma partners to cover up this topic and put some light on the legal issues that are hovering around this. So let me just quickly explain you what exactly is the Bombay Public Trust Administration Fund. And so when this act was set up way back in 1950, so at the same time the government has also established this Public Administration Trust Fund, and the basic purpose of setting up of this fund was to get the funds from its members, public trust and institutions to fund their administration process, be it their enforcement of the law and in all the other processes. So the section 58 of the Bombay Public Trust Act is the section wherein the contribution is defined. So basically, for every public trust, have to pay some percentage of their gross annual income to the Public Trust Administration Fund. So the percentage should not be exceeding 5%. So there are few deductions and few exceptions that is not to be included while computing this gross annual income. So under Rule 32, there are two things which are mentioned. So one is the corpus donations, so which are completely excluded from computation of gross annual income for the purpose of computing the contribution to Charity Commissioner Fund. And apart from that, there are a few exemptions which are given to the trust who are completely working in the education or medical field, or any veterinary treatment of animals, or relief of distress caused by any natural calamity. So these are the institutions, if they're working in this field, so they are exempted from making a contribution to the Public Trust Fund. So the rate of contribution has been since 1989 has been fixed at 2% of the gross income. So and the current scenario, so a lot of trust are having confusion that whether they should contributing it to the fund, or they should not be contributing, or they should just make a provision in their books, and later on whenever any notification comes up from the Charity Commissioner Fund, and then they contribute. So let me quickly go through the entire legal issues that was happening in this area. So initially in the year 1972, there was a appeal which was made to the Mumbai High Court by the Salvation Army Western India Territory Trust and the Lohana Mahajan Trust, wherein the contribution which was the contribution which is paid to the Charity Commissioner was questioned, and the legality was questioned by these two trusts. So basically, since the purpose of this contribution was only to cover up the expenses of the Charity Commissioner's office, and the later on it was completely found that there are a lot of amounts which are lying with the Charity Commissioner office, which are way above than the what are the routine expenses that that are required for the administration of the Charity Commissioner's office. So hence the Honorable Mumbai High Court held that the state contribution is ultra virus, and since the state government does not have any authority to levy any further tax on the public institutions, So, with respect to this, the Charity Commissioner Office and the state government of Maharashtra went to the Supreme Court in 1975, and the matter was discussed at the Supreme Court, and it was decided at the Supreme Court that this contribution at the rate of 2% on the gross income of the trust after March 31st, 1970 onwards undoubtedly assumed the character of a tax, and hence the Supreme Court has restrained the Charity Commissioner Office to collect any contribution over and above 2%. So since that time, the trust continued to make a contribution at the rate of 2% of their gross total income to the Charity Commissioner Fund. And later in 2009, again, the PIL was filed in the Mumbai High Court, wherein the matter was again examined by the Mumbai High Court, and it was asked to the state government and the Charity Commissioner Office to confirm that what is the requirement for the taking of further contributions from the trust. And there was an affidavit which was again filed by the Charity Commissioner Office, wherein they had stated that there was a sufficient amount of almost 250 crores which was lying in the Charity Commissioner Fund, and hence the High Court asked the state governments and the Charity Commissioner regarding the explanation of the administration expenses. And since then, there was no as such explanation or justification given to the High Court, and hence the order which was passed by the Supreme Court and the Mumbai High Court uh, is still valid, and it restrains the Charity Commissioner Office from collecting any fee since September 2009 till any further order is notified. So hence, since that interim order of the Charity Commissioner uh, is in place, that is the reason the Charity Commissioner Office is accepting the books of accounts on an annual basis without taking any contribution from the trust. So right now, what ideal scenario, what the trust should be doing is till the time further communications or the further orders are given by the Honorable High Court of Mumbai. So the trust continue to do all the compliances with the Charity Commissioner's Office, except the contribution up to the 2% to the Public Administration Fund. And I guess now we can move to the question and answer part.
Thank you so much, Suhail and Dhaval, for all that information. We are now opening the round for question and answers. Please type your questions in the chat box that you see on your screen. We've already received a couple of questions, so we'll start taking them while you are putting down the other questions as well. So a couple of questions that Suhail and Dhaval, you all can choose, like whoever chooses to answer, but a lot of participants have a question about what is the process of changing your registration status, and what will be the changes that will come to their current legal status. Things like, will they have to reapply for ATG certification? Will they have to reapply for FCRA? Can you put some light on like this whole topic?
Sure. So again, this is a very evolving sort of a provision. Even though the Section 8 companies of the Companies Act, the law has always been there. And from a legal point of view, there does not appear to be a bar for a trust or a society to convert itself into a Section 8 company. But from a practical point of view, this was never something which was actively being pursued, simply because most organizations would have taken the appropriate decision at the inception stage, and there was no compulsion for them to convert. Now, if this law does become a reality, there will obviously be a huge surge of cases. In terms of the actual process, this is something which will possibly have to be discussed offline, as the number of forms and the procedures are extremely elaborate and detailed. But in terms of a quick summary, you would have to file necessary paperwork with the Ministry of Corporate Affairs for conversion of your entity from a trust to society. And there are, again, forms like SPICE and RUN, etc. for these purposes. Seek necessary approvals from the Ministry of Corporate Affairs. In terms of how that will potentially impact your registration with the tax authorities, that's not something which could be, again, answered offhand. Up to the best of my understanding, there will be an obligation to register yourselves afresh. There might be a change in your PAN number as well, since you're changing your status. But this is a practical question, and depending on how the government comes out with these guidelines, they may intend to make this process a little simpler if they do have or if they do desire over 80% of the non-profit space to convert itself into Section 8 status. And the whole reason that they want Section 8 to be the desired status is because Section 8 is a lot more regulated by the Companies Act, and there are a lot many more compliances applicable to it rather than the trust and society scenarios. So how it pans out is something we'll all have to wait and watch. There is no answer as of today on the whole process. Theoretically and legally, yes, it's possible. Whether you should start on it right now or you should wait for the revised and potentially simplified guidelines, that something is an internal business call or an internal management call you'll have to take once these guidelines or these proposed changes do become the law.
Thank you so much for answering that. I'm guessing like people, just to rephrase this, like you're saying that if people want to find out the process of how to go about this, they'll have to either approach like a CA offline or somebody who is supporting them with the legal requirements. Am I right?
Absolutely, and my advice would always be that it's good to proactively have those conversations, and once this law does come into effect, you'll at least have clarity on the process and you can move quickly.
Great. So the other questions are also pretty similar to this, but again, like you can choose whether you want to deep dive into it or like pass that question and take it offline. But do you feel that the registration date will get exceeded looking at the COVID-19 scenario, or do you think this process is pretty smooth online and people can go ahead with it?
So in terms of the process, indeed, it's relatively simple from a online point of view, but that's not necessarily the case for all NGOs which are located in all parts of our country. And some of the more remote corners may not necessarily have that kind of infrastructure to scan documents or to easily upload and put things together. My best guess is it might get extended, but again, this extension may not be something which is extremely long. It might be a 3-month extension or something like that. But I don't foresee this getting pushed back to 2021 or so, if that's what people might be assuming.
Okay, great. So another question that people have is what is quicker, whether converting into a Section 8 company or setting up a new entity? And what are the costs involved in doing either one of them? And what is your preferable option?
Vanita, unfortunately, that's a very fact-specific question. It entirely depends on the size, scale of your operations, how complex that entity is, what kind of projects you're already running, what kind of grants that you already have in the pipeline, etc. So unfortunately, there is no clear answer for an entity which is reasonably small and which does foresee new work coming to it under the CSR. That may find it easier to shut down the earlier structure and start afresh as a Section 8 company. The only challenge is when you start afresh as a Section 8 company, you will not have a 3-year prior track record, which is essential to be classified as a CSR approved entity. So that's the challenge. So your effectively cycle starts afresh when you start as a new entity of a Section 8 versus if you do convert yourself. So those are pros and cons and sort of cost benefit analysis, which will have to be done as a fact specific scenario. And again, cost will depend entirely on the kind of professional advice you seek. And in terms of the filing cost, I don't think that's something which is going to be extremely large. It depends on the quality of professional you choose to decide on the actual charges for conversion or setting up a new entity.
Great. And in terms of the cost as well, like what do you think are some of the risks that organizations might be having in terms of their current funders if they are looking at changing? The process will be in progress. So, like, how will it affect the current donations that are happening, and how will it actually affect the whole process of donations that people seek?
So again, as we did mention in our earlier part, and I will go back to the relevant slide just for simplicity. The proviso to the Rule 4, which states that provided further that the provisions of this sub-rule shall not affect the CSR projects or programs that were approved prior to the commencement of the rules, which means that if the funding or the projects have been approved prior to these changes, those might still continue, which means if you have an ongoing commitment or an ongoing contract, you might still be eligible to be getting those grants. But moving forward, if the rules do get implemented in the same way as it's being proposed now, then effectively any trust or society is legally not permissible to get a CSR grant, which means the CSR window is shut for you for perpetuity unless you convert yourself or set up a new Section 8 company.
Great. I think the other questions are again similar to the process of registering as a Section 8 company and like the changes that have been required. Again, we've already addressed this in the webinar, so I'm not going to be taking these questions. But again, in the interest of time, we will be stopping over here. Unless anybody has any more questions that are related and specific to their own organization and not just related to the process of changing into a Section 8 company. So we'll take 2 more minutes if you all can put down your question, and then we'll probably take one last question and then stop over there.
And Vanita, some of the questions I'm picking up myself, just to quickly address them. There was a question from Peter that you obviously can continue to operate as a trust if you do not want CSR funding. The CSR guidelines are only applicable in case you want to go down that route. You will continue as a trust. If you do not want that, the other question was from Murlidhar as regarding if you were registered in 94 or whenever in the past under the Society Act, yes, you are absolutely obliged to apply for the 80G and the 12AB registration / renewal. Anytime you've been registered in the past, that is immaterial. But with the new provisions before 31st of August, you do have to file an application for registration under the new rules.
There's another question from Madan Joshi who's asking, if MOU is signed for a good period and funds are scheduled over a period, what will be the status of the same?
So as it appears from the proviso to the rules, if that MOU is part of a CSR policy, which is long-term and has been duly approved by the board and has been well documented, it does appear that you could continue to get those grants, but whether that will be for perpetuity or those 2 or 3, 4 years, that can only be confirmed when it's evaluated based on the MOU and based on the agreement that is actually signed into. But the proviso does create that exception for pre-approved policies or pre-approved MOUs which have been entered into.
Utpala is asking, can public trust merge with Section 8 companies?
That's a question which has not been explored in more detail. And that's something which is a valid point which you're bringing about. Maybe we can note that down and separately connect on the legalities of that process. I did pick up that question but unfortunately didn't have an answer right away. But we'll definitely note it down and try and come back to you separately.
Thank you so much, Suhail and Dhawal. I think we are coming to the end of the webinar. If we will be sharing the feedback form at the after finishing this webinar, and then y'all can actually put down the questions that have not been addressed, and we'll try to answer them as to the best of our ability as well. Any closing thoughts from you, Suhail and Dhawal?
Vanita, I think from my point of view, the only suggestion and recommendation that I would give to everyone is that the tax statute and the tax changes are pretty clear. They are something which you need to already start implementing. And I would use this time that we have available as a blessing where the management teams can kind of discuss amongst themselves, collate the documents which would be required for the purposes of filing of registration. So in essence, what I'm trying to say is that you need to actively pursue and utilize this time to get yourself registered, renewed, whatever is the case, and also keep a track of what are these changes, how are they evolving, continue to remain engaged with your professional advisors and seek their assistance whenever required to implement them. Do not continue to be in the garb or rather in the realm of ignorance that these are things which might get relaxed or these are things which might not come through. That's possibly not the right way of looking at these things. It's important to proactively commit to these changes and be prepared both from a strategic as well as a documentation point of view, and be aware of the revised timelines and create some internal compliance calendars which will allow for you to work through these deadlines backward. And again, just to repeat myself, it's better that you utilize the time now to prepare so that when the lockdown does it end or when you are back in the field, you're not wasting your time on compliance matters, but actually going out to the donors and going out to the projects which might have unfortunately been stalled. And from a CSR point of view, if you do decide to continue to operate under the Section 8 wing or even under the trust or societies situation, if the relaxations do come in, there are a number of opportunities which are also being created for long-term projects and better implementation by partnering with international organizations. So you must go out and explore more opportunities with the COVID scenario. A lot of emphasis would change to the philanthropical bit. And I think my closing comment would be that all of us in the past have been working in a B2B or a B2C model, where I think now globally the world is moving to a H2H, which means human to human model. And therefore, all the wonderful work which is being done by all the organizations on the audience today, we must complement them and support them in whichever way we can to make this a global initiative to fight back.
Well, that was very informative and helpful, Suhail. Thank you so much for taking out the time to share this information with everybody on this webinar. We will be uh, recording the webinar and sharing all the PPTs and resource materials with everybody who's uh, participated today. I'm sure the session has managed to address the many questions that NGOs have around the changes in the Finance Act. Also, as we mentioned earlier, please feel free to email us with any questions that you still have on the topic. By the end of the day, we will be mailing all attendees the presentation that you have seen today along with the recording of the webinar. Thank you so much for your participation. We will be coming up with new topics that will be relevant to the sector. Please stay tuned with the Atma Network webinar series. Thank you and goodbye.
Thank you, everyone.